Hi folks, welcome to Cancer Insurance 101. My name is Roger Johnson. We're going to start with an NBC News clip here. This clip in just a couple minutes summarizes the problem. I'm going to stop it in a couple places to point some things out to you. Then after that, we're going to come back. We're going to look at Medicare, specifically how Medicare treats cancer drugs. And then we're going to look at cancer insurance. And I'm going to show you how an ounce of prevention is worth a whole lot more than a pound of cure and how you can prevent this from happening to you. So let's get started with the NBC News clip. Here we go.
We're back with NBC News in depth tonight. The high cost of health in this country. It's a classic good news, bad news dilemma. The good news, new cancer drugs coming on the market that actually work. In the last 10 years, the Food and Drug Administration has approved 39 drugs to treat cancer and its complications. Many have proven very effective, but the bad news is they are tremendously expensive, more than most Americans' salaries each year, and often are not covered by insurance. Why do they cost so much, and how are people who need them are supposed to pay for them? In depth tonight, here is NBC's Robert Bazell.
They are the cancer drugs doctors and patients have sought for years. They target and kill cancer cells, often with fewer side effects than traditional chemotherapy. But they come with a huge price tag.
So this is the first place I like to stop it. They're bringing a doctor up on the screen. I see I stopped it blurred. But they're bringing her up, and she is going to pinpoint the problem, and then they're going to give us some examples.
The costs have skyrocketed so high that even patients with insurance, good insurance plans, are having trouble with the copays.
Even people with good insurance plans are having troubles with the copay. I tell folks all the time, you need cancer insurance, but they say to me, well, I've got insurance. My insurance will take care of it. I know. Your insurance is going to take care of most of it, but it's not going to take care of all of it. And when you look at the cost and your percentage, what's your responsibility comes as a big surprise to most people, as we're going to see, and it's a lot more money than they ever expected, and it lasts a lot longer than they ever expected, even though they had good insurance. Here are some examples that they're going to give us. These examples are annual examples. Imagine your responsibility being 30% of these costs before they give you the drug.
Examples of the full cost. Tarceva for lung cancer, $35,000 a year. Herceptin for breast cancer, $38,000. Avastin for colon cancer, $54,000. Erbitux for colon cancer, $110,000.
The drugs work, and therefore patients are taking therapy for longer periods of time.
The drugs work. Therefore, people are taking therapy for longer periods of time. We're getting ready to meet Sherry, and we're going to look at her case very specifically. We're going to stop it and read between the lines of some of the things that they're saying here. But listen for how long Sherry has been taking her drugs now.
Person make the decision for this denial.
Sherry Lonergan has been fighting ovarian cancer for 5 years. Other drugs stopped working, so her doctor put her on Avastin.
There's the first thing we're going to start. Other drugs stopped working. So when other drugs stopped working, her doctor put her on Avastin. Seems logical so far, right?
It is shrinking her tumors, but her insurance company won't pay because the drug is only approved for colon cancer. So she and her husband Dana are spending $8,000 a month themselves.
So there you go. Denied. Insurance company won't pay. Why will the insurance company not pay? Because this drug has not been approved for her illness. Who approves drugs for illnesses? Well, that would be the FDA, the Federal Drug Administration. That's run by the government. So boy, they want to paint these insurance companies as bad people, and the insurance company won't pay. Why will the insurance company not pay? Because the FDA has not approved the drug for her illness. This is a drug for colon cancer. She has kidney cancer. So because of that, the insurance company, they cannot cover the drug. The doctor gives recommendations, the doctor's giving a treatment that works, but the insurance company and the government can't get their acts together. So here poor Sherry is paying $8,000 a month. $8,000 a month times 12. $96,000 a year. She's been fighting her illness for 5 years. Folks, that's $500,000. We're getting ready to hear Sherry say, so where is the money going to come from? If Sherry had had cancer insurance, she wouldn't have to be asking, so where is the money going to come from?
I'm not going to let this ovarian get to me. I plan to be here. And, you know, where is our money going to come from?
Why are the prices of cancer drugs so high? Drug companies refuse to talk about how they set prices. And under the law, they can charge whatever they want. Medicare, which does not cover most drugs, does pay for cancer drugs, and it is creating a huge problem.
Sooner or later, we're going to find a situation where there just isn't enough money in the till to pay for these drugs for everybody.
Okay, another reason I highly recommend cancer insurance. Here, they're saying, look, Medicare just not going to have enough money in the till to pay for these drugs for everyone. So who's going to get them and who's not? Folks, I recommend you have insurance, private insurance, cancer insurance. Then regardless of what happens to Medicare, whatever doesn't happen to Medicare, whatever the case may be, you know that if you end up in the situation that Sherry's in and everybody has a 50% chance of getting cancer, you know you're going to have the coverage, you know you're going to have the protection, and you know you're not going to have to worry because you took the necessary steps.
Indeed, experts say the new cancer drugs are becoming one of the biggest strains on the entire healthcare system. Robert Bazell, NBC News, New York.
Okay, so now that we've taken a look at the NBC News clip and we've seen the problem, I want to talk to you for just a second about Medicare. I realize most of the people watching this video are either on Medicare or going on Medicare. Even if you're nowhere close, you're in your 30s and 40s, cancer insurance is important for everybody, but please bear with me for just one moment. The Medicare and You, we have the 2012 handbook here. Under Medicare, and again, if you want all of the details, I'd recommend you go to the Medicare Basics 101 videos where we go through it all there. But just in a nutshell here, if you're hospitalized with cancer under Medicare Part A, your drugs will be covered while you're in the hospital. Now, once you get out of the hospital, you may start chemotherapy, and you're going to go to the doctor's office or an infusion center or an outpatient. That would be covered under Medicare Part B. But then once you've finished your chemotherapy, and as we saw the doctor earlier, he said the drugs work. Therefore, patients are taking therapy for longer periods of time. Once you've been in the hospital, once you've finished your chemotherapy and you start on your therapy, this is where it gets expensive. This is where the holes and gaps are in Medicare. This is the part that we need to talk about. So I want to start by giving you an example, and I'm going to pull up for you here a news clip from last summer, ABC News. This is from June of 2011. Notice the headlines. Seniors face Medicare cost barrier for cancer meds. Chemotherapy, and these are very important words, folks. Chemotherapy is now available in a pill. But if you have Medicare, you may not be able to afford it. That's what happened to Rita Moore when she took her prescription for a medication to treat kidney cancer to her local drugstore. She was stunned when the pharmacist told her a month's supply of the pills would cost $2,400 more than she makes. How did this happen? We're going to find out. Rita Moore didn't find out till she got to the pharmacist what's not covered. When I work with my clients, I like to tell them right from the beginning, here's what's not covered before you get to the pharmacist. And when you get to the pharmacist, if you've got this along with your Medicare, you're going to be okay. We'll get to that in just a second. But before we do, let's take a little bit closer look at how exactly this happened to Miss Rita Moore. This is from page 89 in the Medicare and You handbook, and this gives just a brief summary of how Medicare Part D works. So let's walk through it, and we're going to be able to see how that happened to Rita. First of all, under your Medicare Part D, you may have a yearly deductible. Not all Part D plans have yearly deductibles, but yours might. In this example, they give us Mrs. Smith, and she has a $320 deductible. So Mrs. Smith pays the first $320 of her drug costs before her plan starts to pay its share. Then we move on to number 2, co-payment or co-insurance, what you pay at the pharmacy. Very important. Remember, this is where Rita went when she was surprised. Mrs. Smith pays a co-payment, and her plan pays its share for each covered drug until their combined amount, plus the deductible, reaches $2,930. And then when Mrs. Smith has paid out of her pocket her deductible, her co-pays, and her insurance company together have gotten to $2,930, then she reaches what's called the coverage gap, otherwise known as the donut hole. As we see here, once Mrs. Smith and her plan have spent $2,930 for the covered drugs, she is in the coverage gap. In 2012, she gets a 50% discount on covered brand name drugs. However, brand name prescription drugs. However, cancer drugs are not covered brand name prescription drugs. Cancer drugs are tier 4, tier 5 specialty drugs, so the 50% discount does not apply to them. Moving on to number 4, catastrophic coverage. Once Mrs. Smith has spent $4,700 out of pocket for the year, her coverage gap ends. Now she only pays a small co-insurance or co-payment for each drug until the end of the year. And folks, that small co-payment is generally 5% of a lot of money. So just to review real quickly, first of all, you pay your deductible. In this case, it was $320. Then you and the insurance company together are going to pay the next $2,930. Once you and the insurance company have done that, you are responsible for the next $4,700 out of your pocket, period. Then, once you've paid $4,700 out of your pocket after the deductible and after the co-pays, now you reach what's called catastrophic, and you will pay 5% of the cost of that drug for the remainder of the year. However, on January 1, it starts all over again. You'll pay the deductible, you'll pay the co-pays, you're going to pay whatever they set the donut hole at for next year, and then you're going to pay the catastrophic again until the end of the year, and then it's going to start all over again on January 1. This is what people don't realize, and year after year after year, it can suck you dry on your finances. Very important. So that's a little bit about Medicare. Now let's take a look at cancer insurance. Okay, so now that we've taken a look at the problem, let's take a look at the solution. Folks, I recommend buying cancer insurance. Why? Because cancer insurance will pay you money if you're diagnosed with cancer to use on whatever you need to use the money for. Let me elaborate just a little bit more. Cancer insurance is an indemnity policy. What that means is when certain triggers are hit, it indemnifies and pays you money. Money to use whatever you need to use the money for. I'll give you a couple examples of those triggers. One would be hospitalized. Every day you're hospitalized due to cancer, the policy would indemnify and pay you money to help cover your co-pays at the hospital, your bills at home, whatever you need to use the money for. An indemnity policy does not send the money to the hospital. It does not send the money to the doctor. It sends the money to you. It's your money to use as you see fit. Now, the big one, the real reason I recommend you buy cancer insurance is for this one, chemotherapy treatment. Every day you take a chemotherapy treatment, your policy will indemnify and pay you money. It doesn't matter if it's inpatient, outpatient, or self-administered, infusion center, whatever the case may be, your policy will indemnify and pay you money. This is important. You remember what the doctor said? Even people with insurance, good insurance, have trouble with the co-pays. They're very expensive. Cancer insurance will indemnify and pay you money to help cover your co-pays. Okay. We like to tell folks, don't just think of cancer insurance as health insurance. Think of it also as money insurance, ensuring your finances also survive your cancer. The cancer plan that we recommend does not have a lifetime maximum payout. When you request the brochure, you'll see there are certain things that are limited inside the policy, But the big ones, such as hospitalization and most importantly the chemotherapy radiation, has no lifetime maximum payout, and that's very, very important. As long as you pay your premiums, you can never be canceled. You remember what the doctor said, that drugs work, therefore people are taking therapies for longer periods of time. There is no lifetime maximum payout, and as long as you pay your premiums, you can never be canceled. Now, the core policy is a cancer policy. However, there are two riders that we highly recommend you consider. The first one is the heart attack and stroke rider. Again, the core policy is just cancer. However, you can add a heart attack and stroke rider that will pay out and indemnify just as the cancer plan would. Now, of course, it's a little bit different because cancer and heart attack, so the triggers aren't always exactly the same. But that's how it works. You can add it, and folks, this covers the big three: cancer, heart attack, and stroke. Those are the big three whoppers that can really set you back financially hard. So this is an easy way to cover them. Now, the other rider that I do highly recommend always is the return of premium rider. This makes buying cancer insurance a no-brainer, because people tend to say, well, what if I buy cancer insurance and then I never develop cancer and it doesn't run in my family, or whatever the excuse may be. This takes that away, because you buy the cancer insurance. If you ever develop cancer, heart attack, or stroke, you're going to be so glad you have it. If you do not, and you have this rider, after a specified period of time, you can return the policy for a 100% refund of all your money. Now, to find out exactly how that works, you do need to request a brochure. There is a certain period of time, depending on your age, when you take out the policy. It's 10 to 20 years. It's 10 if you're older. It's 20 if you're younger, depending on your age bracket where it falls out. But folks, this is a very, very important rider to add. It makes buying cancer insurance a no-brainer. If you need it, you got it. If you never need it, you'll get your money back. The only way to lose is to not buy cancer insurance. Take the risk. It's a 50-50 chance that you'll come down with cancer. And if you do, and you've not bought cancer insurance, it will get very expensive. I tell folks, can you afford not to buy cancer insurance? Oftentimes they say, well, that kind of depends what it costs too, doesn't it? We tell folks there is a plan to fit every budget. For instance, if you're a 70-year-old and you're on a fixed income, and you say, Raj, this is important, I understand, I want to be independent, I don't want to be reliant upon others, but I need something cheap. A basic cancer plan for a 7-year-old starts at under $20 a month. Now, they go up from there, and folks, that's not the plan I generally recommend if you can afford more. You'll see that it gets much better if you can afford more, but you would be shocked at how much you can buy at 70 years old for less than $20 a month. And folks, if you're in your 30s, 40s, or even 50s, you can buy what I call the Rolls-Royce Cadillac plan for a little bit of money. And then when you get older in your 60s, 70s, and 80s, man, you've got the best plan, and you're still paying those lower rates. So that's down the road, but we have a plan that fits every budget. The importance of cancer insurance is we like to explain to people, you're going to take a small amount of money and use that small amount to protect a larger amount, to protect that nest egg. And with the return of premium rider, folks, if you don't need the protection in the end, we even give that small amount of money back. So cancer insurance is very, very smart. Now, people worry about qualifying. It's easy to qualify. We have plans up to age 85. If you've had cancer before, but you've been cancer-free for 10 years, you'll still qualify. They don't ask how much you weigh. They don't ask if you're diabetic. They don't even ask if you're a smoker. It's very easy to qualify. There's just 3 questions, I believe. When you give us a call, we'll read them to you. But folks, most people qualify. Okay, so with that, we'd like to thank you for coming to the website. I'd like to thank you for watching Cancer Insurance 101. Folks, I would love to be able to just put the brochure up here on the website and give all the information to you, but the insurance companies do not allow that. We are required to know who we're sharing the information with. So because of that, you have to request it. One way to request it is just simply give me a call. I'll be glad to go over it all with you, including the pricing. Or just simply send us an email. And if you send us an email, I'd be glad to send you some additional information, including the brochure and including another video that explains it. But we have to know who you are, and we have to send it to you personally. We're not allowed to just put it publicly here on the website. So thank you very much for, again, watching Cancer Insurance 101. We're going to end here with a little video stressing the importance of cancer insurance. And if I can be of assistance to you, please feel free to contact me. Thank you very much.
How do you prepare people for the cost?
You don't. You can't.
Joan Deignan counsels breast cancer patients at New York's St. Luke's Roosevelt Hospital. She knows about the cost of cancer. She spent more than $50,000 in her own battle with the disease.
All our money went into keeping me alive on breast cancer, even though I had insurance.
First surgery, then chemotherapy, then drugs. It can cost a fortune to stay alive. But Joan Deignan says a life savings was a small price to pay for saving her life.
You want to get the cancer out of your body.
So when it's life or death, you'll pay anything.
Yeah, basically, yeah. You know, we all would.